All right, in this lesson, we're going to look at reissuing Treasury stock. So in the last lesson, we talked about Treasury stock. What do we do from a journal entry standpoint when we issue when we purchase back our own stock, also known as Treasury stock? In this lesson is once we have them, we're most likely going to reissue them. When we reissue them, we might get some cash for them. And when we get those cash, what do we put as our journal entry for the reissuance of Treasury stock back into the market? So that's what we're going to focus on in this lesson. So let's get started here. Companies can hold their Treasury stock really forever at the end of the day, but at some point they will reissue them to the market by selling them, using them for stock options, or using them for an acquisition of another company. So that's what we said. These are some of the reasons why companies repurchase their stock. So the question is what do we do with it at that point? Well, when we reissue Treasury stock, we cannot report a gain or loss. So what you're going to notice is we're not going to reissue the stock at the same price that we purchased it because the market's going up and down. And because it's going up and down, we've got to do something with the difference. That difference normally you would say would go into gain or losses. Well, with Treasury stock, we can't report a gain or loss on ourselves, so we're not going to report a gain or loss. Transactions between owners are not considered profit activities, and as such, they are only balance sheet transactions. So we need to figure out from a balance sheet, how do we deal with that difference, which I'm going to show you here in this lesson. So here are some of the mechanics. When we do reissue stock, we will need to report the cash that we received. We also need to report the original Treasury stock purchase price. That amount is going to have to be removed from our books, and then the difference will need to be recorded in the additional paid in capital. So three things here: receive cash, remove the Treasury stock at its purchase price, and the difference will then go into additional paid in capital. Either way, gain or loss type of transaction. So let's look at some examples here to walk you through and help you understand this better. Assume company A repurchased 25,000 shares of their stocks at $15 a share last year. This year, they reissued 15,000 of their shares at a price of $22. Prepare the journal entry for the reissuance of those shares. So one of the first things that I want to do is I want to calculate how much did we, the company, repurchased our shares for. So in this case, we are selling 15,000 of our 25,000 shares that we hold. So if I take 15,000 and multiply it by $15, which is what we paid for it last year to reacquire them, we get $225,000. So we've got $225,000 that we purchased them for. So that's what we're going to have to remove in Treasury stock because we no longer have them. We've reissued them to our shareholders, or to the shareholders. So once we figure that out, then the next thing is how much did I get for reselling them today? So in this case, 15,000 shares, and we resold them at 22, which would give us $330,000. So 15,000 at 15 is 225,000. 15,000 at 22 is 330,000. So we do have a difference. So under normal circumstance, this would be a gain, right? You gained, looks like 105,000, but we can't report a gain. So we're going to report that 105,000 in APIC. So the first thing that we need to do is figure out how much cash did we receive? Well, if we sold them at $22 a share, and it cost us, and we had 15,000 shares, we would debit cash in the amount of $330,000. Okay. We also need to get rid of the Treasury stock that represents this $15,000. So we know that when we purchased our Treasury stock, we debited Treasury stock. To get rid of it, we're going to credit. So we're going to do the opposite of what we did in the last lesson. So we're going to credit Treasury stock in the amount of $225. So just by doing that, we know that we're missing 105 on the credit side. So 105, and the reason why we know that is our debits must equal our credits. So our debits are 330, our credits was 225. By putting this 105, our debits and our credits is 330. And we're going to credit additional paid in capital. So additional paid in capital. There we go. Additional paid-in capital. So that would be our journal entry if we sold it for more than what we purchased them for. So that's our journal entry when we reissue that stock into the market. What happens if the opposite happens? What happens if we reissue them for less than what we purchased them for? So let's look at that journal entry here. Everything is the same here, except instead of getting $22, we're getting $12 a share. So again, same logic here, 15,000 shares times $15 equals $225. So we paid $225,000 for those shares. So now, how much are we getting in cash? Well, we reissued them at $12 a share, so we're gonna go 15,000 times 12 equals $180,000. So we sold them for less than what we purchased them for. So we have a difference here. That difference is $45,000, and we need to do something with that $45,000. So again, same logic as before. We're going to start with cash. How much cash do we receive? Well, we received $225,000 in cash. So I'm going to debit cash. Sorry, not 225. 180. We're receiving 180,000 in cash. So I'm going to debit cash of 180. And then we know we're going to have a treasury stock release. So we're going to release 225,000 worth of treasury stock. So I'm going to credit treasury stock in the amount of 225. And the question is what's left? Well, debits must equal our credits. So we're missing 45,000 on the debit side. So we're going to put $45,000 here. And then our debit would go into additional paid-in capital. So again, we still are going to put in the additional paid-in capital. So debit additional paid-in capital. And we have our journal entry for a reissuance of a treasury stock at a price less than what we purchased them originally for. So that is our journal entry for that type of transaction. So that's a look at the reissuance of treasury stock. It really isn't that complicated. It's really comparing what did we buy it for versus what did we sell them for, and then the difference wouldn't be a gain or loss. In this case, it would just be taken out of additional paid-in capital. And by doing that, we don't have a gain. We just are kind of rearranging the balance sheet, right? We're putting some more in cash. We're rearranging treasury stock into additional paid-in capital. So we're only dealing with the balance sheet. We're not even touching the income statement. So hope you enjoyed this lesson, and we'll see you in the next video. Hey guys, if you like this video, make sure you press the like button below. And if you're looking for worksheets that go along with all of these lessons, head over to my website at patrickleemsa.com or click in the link in the far right. And I've got your next lesson right over here. So just click that link and it'll take you to that video. So until then, we'll see you in the next lesson.